Dun, 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 dun. Welcome everyone to Crypto in Asia. Hey guys, I'm Cian, one of your hosts, hailing from Seoul, Korea, and I have my two other fabulous hosts. Guys, why don't you introduce yourselves?
Bobby, you go first.
Yeah, okay. Hi, I'm Bobby Ong, co-founder of CoinGecko. I'm located in Malaysia over here.
Hi, I'm Koji. I'm doing some media and marketing work in Japan mostly now, from Japan.
All right, so how have you guys been? I mean, it's been what, like about a month now since we last did the show?
Yeah, have you guys been busy?
Yeah, I think a lot of things has happened since our last conversation. Like Bitcoin price went up, like
Oh yeah,
happened, and then
right.
it's a correction now. I think even in past 1 month, like I think Bitfinex came and did their $1 billion token sale for Leo, and all within 1 month, I think.
Was that a month ago still? Feels like it was like 6 months ago.
In crypto time.
Yeah. Well, it happens, right? So I was doing a monthly show in Japanese last week, right? And like, okay, we're reviewing last month. Okay, Binance got hacked. I'm like, wait, I thought that was like 3 months ago because everybody seemed to forget about it already, right? So yeah, things happen too quickly. Like Binance, I was actually in Malaysia and with Bobby and the other CoinGecko guys, and like, I'm like, oh, Binance got hacked. Yeah, so that was pretty crazy.
Oh yeah, I remember. It was probably slightly less than, actually it was less than 1 month ago that hack.
Yeah, it's hard to believe. Everybody forgot about it already.
Yeah, and the price didn't reflect.
Oh yeah, that's another thing, right?
Yeah.
How's the market sentiment in Korea or in Malaysia nowadays? Is it because the prices are going up? Obviously market gets heated up, and people start talking about prices, or like mainstream media pick up on it, right?
Mm-hmm.
Is it the case in Korea or Malaysia?
Dean, do you want to go first?
Sure. So in Korea, that I think I mentioned on the show before that in Korea, all exchanges have two types of accounts. One is like the real name account, and then another one is what they call like a beehive account. But they've blocked off basic new registration, right? New users registrating, and they've registering, and they made it just extremely difficult for people to be onboarded. So even when there was the price pump, there really wasn't that many new users being added to exchanges to buy crypto.
Wait, I missed that conversation maybe last time. But why is that?
Okay, so yeah, the Korean government kind of took a approach, since like the end of 2017 of kind of like suffocating the industry as opposed to snuffing it out.
Why?
So, I think there's different ways to skin a cat, and that just happens to be one of the ways that Korea decided to do it. So yeah, so every exchange, there's only about 4 or 5 exchanges in Korea where people can use their real name accounts to register, and then each bank will issue out a virtual, what they call a virtual account in the banks, and you can register that way. Every other company, basically what they're doing is they have their company account, and everybody sends money to the single account, and then they divvy it up in the backend, in the database. And so that's like the beehive account. So sometimes you'll have cases where the exchange has ridiculous amount of volume, but actually they're not really like recognized by the government. Yeah. But yeah, that's what's been up.
Okay. How about in Malaysia? So it's actually, so in terms of trading volume and everything else, it's not really going up as it should because of the government intervention in Korea.
Yeah, it's up, but I don't think it's new people entering the market.
Okay. Interesting.
Yeah. I think I would like to carry on with that point before I go to Malaysia. So I think the price increase in Q2 has been definitely interesting. We're seeing more people coming to visit CoinGecko and all. But in terms of new people coming into the space, I don't think there is an significant increase number of people. It doesn't feel like what it was in 2017, where there was every day there were like many new people coming into the space. So it doesn't feel like what it was. So I don't know how sustainable this price run is, but it almost feels that people are not very excited or super crazy about the current price. But if you think about it, like close to, I mean, today the price went down a little bit, like, but I mean, it was close to 9,000 USD at one point. This is pretty good, man. Like this was, we have to go all the way back to 1 year ago before you even see this price. But I mean, people are excited, but not a lot of people are very excited about it. Especially like those who sit by the side. I don't think they're entering the market yet. They're just sitting and observing by the side. And in terms of Malaysia, I think it's very interesting because today the Securities Commission of Malaysia announced a provisional license for 3 exchange operators. So they finally given out to 3 exchanges, Luno, Synergy, and Tokenized Exchange. And these guys have basically the next 9 months to fully comply with all regulatory requirements. And once they comply, they'll get a full license. So it's very interesting. It's like a multi-month process where the Securities Commission are looking to regulate all these exchanges. And I'm very glad that they finally did it. So I guess with this, it'll be very easy for Malaysians to buy and sell cryptocurrencies with these exchanges being fully regulated. Yeah.
Do you think it'll be a boost for the Malaysian market?
Yeah. I think definitely will be a big boost. Now these guys can go out and promote as much as they want. Before this, they could not operate. They could not onboard new clients, but now they can go out. They can onboard new clients. Of course, subject to them getting a bank account. But I would say that I'm pretty sure they'll get a bank account because there's only 3 regulated entities, digital asset exchanges in Malaysia, and then I mean, you're licensed by the Securities Commission. Like, it'd be pretty odd if you can't get a bank account otherwise. But and I think one of the good thing is once they are regulated by a regulator, they can spend money on like social media platforms like Facebook, Google, and they can advertise because they can get whitelisted because they have a license from the government to go out and run an exchange business. So there is no reason for Facebook to block like advertising from these guys, so they can go out and start promoting, running road shows, or basically things to onboard new clients. At the moment, it's pretty hard to onboard. The fiat crypto on-ramp in Malaysia is pretty bad. No exchanges are operating, and a lot of people are basically relying on peer-to-peer marketplaces or OTC. It's not the best user experience, but with this, I would say that it'd be a lot better. Yeah. Very interesting.
Yeah, okay, that makes sense. In Japan's case, when the regulation got officially enacted in 2017, companies had a justification. Oh, we can just go in full now, right? Because of the regulation, it's official. And then also the retail investors have more confidence in the market because obviously the government recognizes it is a good thing for most people, I guess. Maybe not for like, old OG Bitcoiners. I mean, it has nothing to do with them, but for most others, it was a big boost. So I guess that's what's going to happen to Malaysia. Or maybe when crypto is officially regulated in Korea, maybe that will happen as well. Or popularity of crypto is already very, very high in Korea, I guess. So maybe it'll make no difference.
Yeah, but what like Bobby said, for all that, like, I guess we all love decentralization, and we all love, like, we're all dreaming of that day where we could have like perfect, like, peer-to-peer decentralized exchange experiences and whatnot. But really at right now, what we do need is fiat on-ramps, right?
Right.
And even if it means getting a nod from the government to get people to start changing their fiat to crypto, and then once they're locked in, I mean, I think based on my experience, you pretty much stay in crypto all the time afterwards. So whatever works. If the government tells, if they draw the line and they tell you what's black and white, then it allows for more people to just jump in and start getting the ball rolling. I always think stuff about exchanges, like even looking at Japan, right? Although it's really, really strict, at the same time, I really don't think there isn't there are too many countries in the world where you know that you can get fiat into crypto, and you know that that won't cause any issues.
That's fair, right? At least for exchanges, they used to have a lot of banking issues, right? Banks refuse service to them. Right now, these days, it probably doesn't happen anymore. For smaller startups, it still happens for like, micro level scale. So you kind of have to hide you're working on like crypto startup or crypto projects. But for licensed exchanges, it's not an issue. So yeah, that's definitely true. The other thing that Bobby mentioned that was kind of interesting is that people don't seem too happy yet. People don't seem too excited yet. And I can kind of observe the same thing in Japan, Japanese social media as well, like on Twitter. One of the reasons might be that the people who are behind this pump right now is institutions or kind of big investors, people say, right? Maybe that's one of the reasons. So retail investors are not really benefiting from the run. What do you think?
I don't know if the institutions are coming in yet. A lot of people are saying it, but I mean, it almost feels like they are just old-time OG whales buying out Bitcoin and pushing the price up instead of institutions coming in.
Mm-hmm.
Maybe small-time institutional funds, small-time token funds, hedge funds, and all are coming in, but it's hard to imagine like institutions. A lot of people are thinking institutional funds are in, but not so sure. But definitely for retail, I'm not feeling that the retail market is getting into the space. Maybe retail market only gets interesting whenever it hits all-time high. And clearly we are not, we are only halfway from its all-time high, so probably won't see any interest until maybe Bitcoin goes to above $20,000, and yes, everybody starts going crazy.
Yeah, I think if the Bitcoin price goes all-time high beyond like 20,000, I think they'll come back. But right now, even though the price is really high, I think it's close to 10,000 already, right? In 2017, when the price hit 10,000, people are like going crazy, right? Yeah, it feels very different now. It's much more quiet. A lot of weak hands seem to kind of get out of the market already, and they don't come back yet.
I think there's a lot of really good macro indicators, though. Just with
China, US,
trade wars,
yeah,
and like Deutsche Bank like not doing that well, and et cetera,
right.
et cetera. All those macro indicators really. I don't know. People will be looking, and I think they can rest assured. They can rest assured that crypto is kind of an alternate asset. It moves very differently from everything else out there in the market. Same with me. I actually talk to a lot of people from finance. I happen to have like friends or acquaintances that are working in finance, and all of them, as bad as the financial markets are right now. They know it, and they know about Bitcoin. They invest on the side, but like from an institutional perspective, it's so hard to jump in. Even you could say what you want about Bakkt. You could say what you want about Fidelity. Those are institutional grade, but there's no legal framework for them to like start entering and start buying things up. There's no precedence. They're gonna sit and wait.
Okay, fair enough. Another thing I wanted to bring up was the Bitcoin dominance coming back, at least a little bit. Do you think it's a trend, or it's just a temporary thing?
You think it really, like, for me, I just think that's one of those vanity metrics, in my opinion. Yeah, I mean, I don't really know what that means either.
Well, I think there's personally, I think it's probably a trend. So institutional money is coming. Like Grayscale, for example, they're mostly buying Bitcoin, and those institutions probably won't buy very smaller scale altcoins or so-called shitcoins, right? Retail investors would be happy to buy them, maybe. So I think it's kind of a trend. Bitcoin and other major crypto are, increasing their presence, while smaller altcoins are maybe losing its market share. It's kind of one of the things I'm thinking now. But
I think if you think about it, like the price run in basically the entire Q2 from 1st April has been to a large extent driven mainly by the run up in Bitcoin price. normally you expect like Bitcoin go up and then the price of other alts to go up as well, while Bitcoin, and then they rotate between these two, taking turn of who goes up. But this time it almost seems like Bitcoin is going up and the rest go up, but I guess not as much.
Not as much, yeah, right. Yeah, that's the interesting part.
But more than Bitcoin, the percentage increase will be higher, but now it's like less. And
yeah,
of course it increases as well, but not as much. So it's mostly Bitcoin driven. It's interesting that Ethereum Ether price has gone up above $250 as well.
Mm-hmm.
It's like below $100 at one point at the start of the year. So yeah, I mean that's probably why Bitcoin dominance has gone up. I mean, let's see if the others have gone up, but not much catalyst, I would say, for the time being, and the market is appreciating Bitcoin more at this point in time.
Yeah. Okay. So when you see the Bitcoin dominance go up, it sounds like, Bobby, you're saying that there's consolidation in Bitcoin. It's like either people who's entered the market, they're becoming smarter, so they're starting to think of everything in terms of like getting more Bitcoin, or the Bitcoin whales are getting more, stacking more sats.
No, I actually honestly think investors are getting smarter because they got burned in 2018. They feel the pain now, right? So I think they're definitely a little bit smarter.
A little bit.
Well, at least they have, some precedents, like, oh, these guys were like, partying about this altcoins and then it goes up like 200% and then crash to almost zero or something. They know all that data. They have all that data now. So I think they have to be a little bit smarter, a little bit more careful than before in 2017, for example. At least that's my hope.
Yeah.
Maybe I'm wrong, but
it is. But like, if you think about all the investors who keep buying IEOs, like it's like a
right, true.
Like a easy way to make money, and then like a 100% sure win ROI. I mean, it makes you wonder like whether these guys know what they're doing. But I mean, to a large extent, most of them have seen returns, but you've seen some IEOs performing pretty badly. Still surprised that the music's still going on after couple of months, few months.
Yeah.
Let's see how long this lasts.
No, yeah, I'd argue they're pretty smart though, because they don't believe in those projects, right? They're just buying because they know the price will go up.
Dumping, right?
Yeah, then they'll dump. So they're not very stupid about it, I think. They don't believe in them.
But if you think about it, I mean, I think you're right. Like the people that are investing in IEOs usually don't believe about it.
Yeah.
But when has there ever been a time where it's so easy to invest in an early stage project? Like I was talking about this with my team today, but we have a lot of projects that are asking for equity, right? Mm-hmm. And then whenever we do due diligence for them, there's quite a lot of papers to fill out, and it's really hard to pick out which ones we should invest in and which ones we need to pass on. Mm-hmm. But like to say like the back in the days, like Mastercoin, right? I don't know if any of you guys like entered Mastercoin.
Mastercoin, man.
But just think about how hard that was, right? Like the barrier to entry.
Oh God, I participated in it. Now I remember. I have those wallets and all.
Nice. Yeah. How did it go?
It was hard.
You don't remember? Yeah.
I think I can't remember, but I definitely have Mastercoin.
But back then, it was the barrier was so high, right? And now it's you're a member of you're a user of an exchange, and you just click a button, and then like there's gonna be a lottery, and you can like put your money in. It's pretty I mean, that's not the hard part anymore. I think the fundraising part and like putting your money in, that's not the hard part. It's actually like
true.
something that's useful out onto the market and like making sure your project actually.
Oh, that's a completely different thing, and it got abused in 2017 to 2018, and that was the issue I personally found. But it's definitely easy to participate in ICOs or IEOs nowadays, right? Very easy. Anybody can do it. Yeah. Okay. I guess we should go into the discussion of fake volume, which CoinGecko recently made a huge announcement on. I'm very fascinated by this as well.
Yeah. So on the first day of I was in Consensus in New York. And on the first day of Consensus, we made an announcement where we, instead of sorting exchanges by trading volume. We are introducing a new score called Trust Score, where we look at exchanges, web traffic, and order book data, and to determine which one have a better sense of liquidity. So in a traditional market where everything is regulated, 24 hours trading volume is generally reported trading volume is a good indicator of exchange liquidity. But in crypto market where it's not regulated, all these guys are out there to putting up fake data so that they appear as the exchange with the largest trading volume, and they want to appear as the largest one in the world. So what they do is they wash trade, they create all sort of incentive like transfer mining to inflate their trading volume. So what we do at CoinGecko is we realize that the 24 hours trading volume, reported trading volume, is sort of becoming a nonsensical number. Everyone's kind of sort of faking it to some extent. The question is, are you faking it 1%, 10%, 20%, or 99% of your entire real trading volume? And we believe that we need to look at other metrics to normalize the data. So what we did was we took a look at similar web traffic estimates, and then we compare. So you expect that assuming all exchanges have the same number of users on mobiles, same number of trading volume per user, you expect that exchanges with high reported trading volume should have higher traffic that they get from their website, and vice versa. But what we found was that some exchanges with super high daily trading volume, like over $1, $2, $3 billion, only have like, let's say, reported estimate of traffic from similar web of around 50, 100,000 per month, which is sort of ridiculous because if you compare a number, Binance may report $1 billion in daily trading volume, but they may have like 30, 40 million of monthly traffic page views per month. So it just doesn't add up, because if you divide the two of them, you see that the average daily average trading volume per user is a lot higher for some of these exchanges. And this is not a little bit higher, but it's a lot higher by the magnitude of 100, 1,000 or so. And so we had to normalize some of this data, and we come up with a metric. So when we did this, Binance, if you look at the reported trading volume, was somewhere number 9, 10, 11, 13 at one point among all the other exchanges. But when we normalized this, we saw Binance as being the exchange with the largest trading volume. So you expect like Binance, Coinbase Pro, Kraken, Bitfinex as some of the top exchanges. So which kind of makes sense. And then all these exchanges as well are sort of manipulating their trading volume on the coin pages so that they appear at the top. So what we did was we look at the order book data. So we look at the bid-ask spread and then the cost of capital required to move the order book by 2%. So imagine your Bitcoin price is trading at $8,000. What we do is we count the 2% lower bound and 2% upper bound. And then we sum the orders in the order book and calculate how much order is required to move the order book down by 2% and how much to move it up by 2%. So here's an interesting stat. So what we found was that there was an exchange that supposedly have $100 million in daily trading volume, but their bid-ask spread, and this is for the Litecoin market. So LTC BTC is supposedly the third most liquid exchange. It has a bid-ask spread of over 89%. When we saw it, it's like, okay, what is going on?
Yeah, I'm pulling up the screen share.
Yeah,
so you can see.
Yeah, so this is the one, and maybe you want to go to the. So yeah, I continue the story. So the bid-ask spread, and then you expect that 89% is pretty high. So what we saw was the bid and the ask has an extra zero in there, and then we saw a lot of wash trading happening in there. And what we saw was the order book was like less than $100 to move it by 2%. So essentially, there was no way to make any meaningful trade with at that.
Okay.
Is there a reason you're not mentioning the name of the exchange?
Yeah, no,
I mean,
or did Koji just click on the?
well, I mean, just randomly just click on hit BTC. But I mean, you don't have to call on any single exchanges because according to this data, a lot of exchanges obviously are faking data. Like say Upbit, for example, it's normalized pretty hard, right? Here, can you see it?
Yeah.
What do you think? Do you think this is kind of a tough question for you maybe, but do you think Korean exchanges are also faking volume as well?
I don't think they're faking volume, but I don't think they're for market economy. Let's just put it that way.
Okay.
Like I'm a market economist. I believe like you kind of need to let the market be and let it decide what it wants to do. But I don't know. These people have some other agenda.
Well, yeah. I mean, there's no regulation, but say like for example, Bitbank. Right now, the largest exchange in Japan in terms of liquidity, the normalization is relatively minor, right? Less than like half at least compared to some Korean exchanges maybe. Yeah. So I mean that's one of the things regulation does is make everything like make fake volume, wash trading, all those things difficult because there's much more risk associated with it, right? So
yeah, and in that sense, regulation for exchanges is pretty good.
Yeah. Poloniex seems pretty clean. And all those things, it's pretty interesting. So I was looking through this and like, these are KuCoin. I don't. Is KuCoin is that a Korean exchange or
no? KuCoin is not
right?
a Korean.
No, some people still say like it's Korean. I don't understand why.
It's not Korean.
Yeah,
I don't know which country they're in. Maybe Singapore, I think. Incorporated in Singapore, but I mean it's a Chinese-based team.
Yeah. It is. I think it's a very interesting new, another tool to evaluate the market because CoinMarketCap's exchange ranking was really like getting out of control, in my opinion. It was not useful at all, but people still use it. That's the funny part.
Yeah, people use it to get misinformed so that they can make
True.
So yeah, I think one of the other things that we are working on this quarter and next quarter is we plan to add more metrics to Trust Score. So we now have like web traffic and order book, and then we give sort of like a traffic light, green, yellow, red signal on how good each individual pair is. We plan to add a proof of reserves at some point to see how much Bitcoin, Ether, and BCH that these exchanges have. Proof of reserve, look at trade history, look at the API quality, for example. So the theory is that if you have nothing to hide, you would give everything that you get in the API because then we can query everything and check and verify. But if you have something to hide, you probably want to do all kinds of things to prevent someone from getting the data to analyze them in detail. API access, we will look at social media, do some sort of user reviews as well. So a bunch of things are coming out. I think we are working on the next batch of proof of Trust Score improvement. Hopefully we can enroll it out soon. So yeah, I think it's very interesting.
Yeah, definitely. Yeah. I mean, for me, for example, like I work in the Japanese market, so that new Trust Score favors Japanese exchanges a little bit more. So that's kind of good for me personally as well. Otherwise, CMC exchange rankings, Japanese exchanges have no presence whatsoever, right? Zero. And then they cannot really fake volume as well. So what can they do?
Surprised to hear that, you would expect that some of the smaller exchanges with like really small trading volume, like they actually like this initiative because like even though their trading volume is really small, and then we normalize it, it's still small. Like they still support it because at least I guess from their point of view now it's more fair. Like if they don't cheat, but everyone else cheats, like then like the other cheaters get penalized a lot.
Right.
And they stand a better chance, I suppose. So I mean, I think reception has been pretty good. A lot of exchanges have reached out and say that it's good stuff that you're doing all these things, and we plan to improve and increase transparency in the space. It's getting a bit ridiculous, all this cheating happening in trading volume.
Yeah, it also shows how strong Binance really is as well. looking at the ranking, like without faking volume, right? It's just Binance is like dominating. Yeah.
That CZ, he's an operator.
Oh yeah, and then let's talk about the Binance Hack incident maybe a little bit since it happened last month.
Everyone forgot about it.
Exactly. What was the reaction like in Korea? Maybe first of all, not much
Binance does not have a presence. Well, people do use Binance, but there really hasn't been any kind of like localized Korean exchanges. So the reaction wasn't that big of a, and I think if the price really did a swing, I think people would have paid much more attention. But everybody's like, Safu. I'm okay. My funds are Safu.
Okay.
It's just, not that big of a deal. Except, like, I don't know. You guys noticed that, like, Binance had a hacking incident that happened the year before, and it was also 7,000 BTC.
7,000 BTC was stolen as well.
Yeah, what's the 7,000 BTC? Is it like a magic number for Binance?
Yeah, maybe that was their API withdrawal limit. That's how they got hacked this time. So I don't know.
Well, yeah,
How about in other parts of the world?
Yeah, in Japan, kind of similar. People forgot about it in like a couple of days, I think. and people, the money is safe, right? Nobody's losing any money is another thing. So the only people who are kind of making a fuss about it is, like Bitcoin enthusiasts, because of the CZ's mention of potentially rolling back, or so.
Oh, that
was the only thing. But for the Japanese market in general, not much of a big deal. Same in Korea, I think. Yeah,
I guess not the biggest hack in the world, and like we've seen bigger hacks from Bitfinex, and also I guess it's big, but not as big as the others, I suppose.
Right. I'm surprised that Bithumb still was safe last month, because it seemed to me Bithumb gets hacked pretty often. Yeah.
Yeah, it's these exchanges.
I'm not making fun of them. It's just
I don't even know. They got too much money. I also know like what's happening within these exchanges, and they're not like the greatest companies to work for. But
okay.
For some reason, but like, and there's also talking about Binance. Do you guys notice the thing about like Binance DEX possibly doing a geo-block on US?
Yeah, I think geo-block not just US, but a few, I think 20 countries, I think. Let me take a...
Yeah, that's kind of ironic.
Yeah, decentralized exchange.
Yeah, but CZ tweeted out, right? Well, they're just blocking web traffic, but the blockchain itself is public, so anybody can use it if they want to. It's kind of their own responsibility, right?
Yeah, but I mean,
I know what you mean. But I know what
there's all these rules, right? There's the Binance DEX. Like I just see so much regulation stuff coming in, because there's the geo-block stuff from Binance. There's also like the FATF. Yeah, the G20 guys talking about like gray listing addresses.
Oh yeah, that's concerning. Yeah.
Iran, was it Iran, or like local Bitcoins like blocking out Iran or some other country like that? We're seeing all these, like when I first entered the industry, like these services were not blocked at all. Like it was really like borderless. And then now we have this centralized web, and it's just getting it's affecting the crypto industry.
Yep. Yeah, it's definitely a trend, and it concerns me as well.
Mm-hmm. Mm-hmm.
I mean, there's no helping it. I mean, that's what the authority decides, and like say like Japan needs to follow what Adolf says, and it's everything basically. So the recent revision of Japanese regulation, Japanese crypto law. Another thing I wanted to mention today was it's pretty strict, and one of the biggest thing I don't like about it is it makes custodial services very, very difficult in Japan. So what it says is, if you're a custodian of some kind of cryptocurrency, regardless of the amount, could be like $10, right? $100, whatever, very small amount. You also need to get a license, the same as regular exchanges, which is not possible, right? So after the announcement of the bill passing, then a lot of tip bots and smaller monocoin services in Japan announced they're suspending their services, freezing their services basically, because they cannot really do it anymore. Right. And that's very concerning. So something like Lightning Network's Blue Wallet solution, for example, custodial wallet, right? Mm-hmm. You cannot do it in Japan. So you cannot build that in Japan. So it kind of hinders a lot of experiments and sometimes innovations for crypto startups, in my opinion. So
yeah, that is very similar to the FINRA guideline thing that came out, right? Where they said like all the open finance DeFi stuff is okay. All the multi-sig stuff is okay. But then, you know, like every country is doing it a little bit differently.
Right.
But yeah, it's sad that like a lot of monocoin stuff has to shut down though. I had never thought about it that way, where you say like,
yeah, I'll write about them later on Medium or something, but I definitely think that's not a very good direction for Japan. So I'm kind of disappointed. I mean, for exchanges, it's okay. They already have a license, right? So it's not an issue for them. But the crypto law in Japan seem to expect exchanges to do everything. So they are like the default crypto companies, basically. So, yep.
So Korea, I think I talked about like, you know, the real name accounts, and I talked about like the Beehive accounts, but starting from, so right now what's going on here is up till June, where the Financial Services Commission and our Financial Supervisory Service, they're actually doing reviews on all the exchanges to see which exchanges will be, you know, will actually get like these virtual accounts. And based on this, starting October, they're gonna issue new virtual accounts. But everything, this is done not under like regulating exchanges, but this is all done under like virtual currency and AMLs, and then CFT. All that regulation falls right under this. So I'm just kind of worried because if it's not very, very specific, you know, because you already have AML and CFT laws for existing financial institutions, right? So I understand that, but like if there's an AML CFT law that's different for crypto than there is for existing financial institutions, that always worries me a lot, right? Because you know, and yeah, we'll see. I mean, like you said, there's gonna be like, there's the first degree effect that we can all predict, but then the second, the third, to fourth degree, that stuff is what's really hard to predict.
That's true. So, Sion, you've been doing a lot of enterprise blockchain research, right? Can you talk about that?
No,
right? Because
I can talk about this.
Yeah, you know, I'm not a biggest fan of enterprise blockchain in general, but I would love to know what's happening and what goods it's bringing, or maybe some, I don't know, criticism, challenges. I'm curious.
Sure. So let me explain a little bit about what it is that I'm doing. So I'm working part-time for Deloitte right now. And,
oh, really?
Yeah.
That's cool. Didn't know.
It's a two-month part-time gig, and basically I'm helping them out with their enterprise education, where they're educating like C-levels, right? And I'm part of that team, and the two things I'll be presenting on is open finance and enterprise blockchain, or it's actually like more like public-private hybrid and enterprise blockchain. I'm trying to figure out what these things are. So based on my research, what I'm seeing is there's public on this end, there's private on this end, which is like a centralized database, more or less. And then there's hybrid, what you call like consortium blockchains, right? Where people come together and these permissioned, it's like a permission blockchain, and these groups of people end up creating their own network, right? And then the thing is, I think a lot of people got the misconception, or a lot of companies and enterprises got the misconception that somehow private blockchains offer more privacy, which is completely false.
In some situations, maybe, because information is not public.
Yeah, but it's like, then it's not a blockchain, right? If it's a single company running their own network, then that's not a blockchain. That's the centralized. You might as well call it a centralized database. So what it is there's actually different layers. What basically what I'm telling them is there's different layers to like a blockchain architecture, and depending on which part of the layers that you select, you actually end up getting very, very different effects between public and private. So this whole part is not black and white, it's actually a continuum. And right now, what enterprises needed to do was, they usually like forked Bitcoin, or they forked Geth, like the Ethereum client, or they took Hyperledger, and they needed to kind of hack it together themselves. So there wasn't very much like customizability. So when we say enterprise blockchain, first of all, like the whole like, like Pegasus team creating Pantheon for Ethereum, or like the whole Hyperledger thing, or the whole like Corda thing, all that is referring to is like this customizable stack that comes out. Mm-hmm. And you could fit it in between these two continuums, these two extremes, right? Now, so we now have these solutions, which is like out of the box configurable blockchains that enterprises are used to. It's kind of like what they've used their whole entire the life of their company, right? It's just software as a service, just very, very typical thing. And now we have like blockchain as a service, to where you could just spin up these blockchains on the cloud. But the problem is, it's not a technological problem. The reason enterprise blockchains don't work is because of because we live in a capitalistic society. And a capitalistic society, you need to get monopoly of the market, and every company is a competitor to another company. And the primary thing that blockchains ask for is that you need to share information, and that because you don't trust anyone, you have to have like economic incentives installed in there so that people are acting honestly. But the thing is, all these business use cases, from my research, all these business use cases that all these different enterprises are coming up with, they're in like an old world mindset, right? Where everything is zero sum, and you expect your consortium to work with you. But the problem is, in your consortium, there's also your competitor. Your competitor's in your consortium. So you have to come up with standards that's going to satisfy everybody in the consortium, but that's not going to work. It's just politicking 101, right? Yeah,
definitely. But that was one of the bigger criticism for enterprise blockchain or consortium blockchain for a long time. Is there any solutions to that? Like improving privacy? My understanding is that Coda was kind of working on that, so that other participants also cannot see transaction information from competitors or something like that. I don't really fully understand, but
yeah, absolutely. But that's a cryptography problem, right?
Yeah.
And it's not where what's funny about that is, private blockchain, when it comes to applying cryptography, private blockchains are doing no better than public blockchains. You're applying the exact same sort of like zero knowledge proof, or like range, right. Whatever it is. You're applying the exact same technology on top of these things. Mm-hmm. And just the cryptography, it just takes time to get these things to production, right? Mm-hmm. And so it doesn't really matter what you select that much. It's more of like, do people understand it, and are these business use cases viable?
Have you seen any success for like private blockchain implementation in your research at Deloitte?
No.
That's very pessimistic, actually. But that's interesting because you actually look into it, right?
Yeah, everybody does POCs, right? But there's no POC that's been taken to production.
Right.
And so I hear several things. One is like, we're just at that phase where we're testing everything. So we have to do a lot of trial and error in terms of POCs. Some other people say that maybe it's a value chain problem, where you have to apply decentralized solutions across the value chain. But that doesn't sound like a POC. That sounds like a little too much commitment for any company that's willing to explore in this area.
True. But that doesn't really sell well, right? If you tell them, private blockchains or enterprise blockchain don't really work. They're just like, well, no, that's not what I heard from this other guy or something like that.
I just try to talk a lot of and even like the education is in about 2 weeks, but I tell them it's about common sense. And what's funny is, what they want at the end is not decentralization. What they want is automation. Like, they want bigger profits. So you want automation, you want standardization, you want interoperability, you want transparency, you want privacy, you want information security. These are the features that you want. And I just want them to know, like, blockchain doesn't promise you all of these things. It may promise you a couple, and then move on to other things. Like, the cloud's not bad, like, why are you not using the cloud? There's relational databases that are available to you right now. Yep. Why don't I just really think about like how to make a meaningful solution as opposed to like trying to like put on some of that blockchain fairy dust and then click your heels 3 times. All of a sudden you get people to use your software.
But at the same time, I feel like I understand why they're doing what they're doing. I feel like this is kind of a typical innovator's dilemma type of issue where companies or maybe banks, financial institutions see public blockchains as a threat and they want to do something about it, but they don't really have an incentive to disrupt themselves. So they end up like, going to like private blockchains or others that seem less disruptive to their existing services, right? So I think it's a kind of an incentive issue as well. Like it's not like they're just stupid and they don't understand anything or anything like that. Because a lot of the companies, they don't really use public blockchains for their services, right?
Oh, yeah. And
that's the dilemma they're having, I think.
So I think what you mentioned is very interesting because I actually think that there are some enterprises for which things are clicking. Mm-hmm. They actually get it. So good examples of this is like JP Morgan with their Quorum thing. Like Quorum is really good.
Okay.
EY recently released their Nightfall stuff, and they're like open source from day one, right? Mm-hmm. And there's also a very strong push. I don't know if you know much about like IBM Hyperledger or Corda, but back in the days, Hyperledger used to push for like one private network per company, right? Which is like, then you get the question of like, how are you going to connect all these private networks? And they talked about these channels connecting everything. But then they gave up that idea, and now they're talking about connecting private networks to enterprise Ethereum. Or like Corda used to be like where it's one blockchain per application. And now they're talking about like the Corda network, which is like a little, they're thinking bigger, more about interoperability. So now you're seeing all these guys that started off as private moving towards like public and syncing up with the public. So I find that to be, some sort of progress.
Interesting. Okay.
It's boring research.
No, it's kind of important at the same time because say like I'm kind of critical about enterprise blockchain application, but at the same time I haven't really done much research myself, right? So I have to kind of listen to people like you who actually did, so like I can talk about it. Oh, I heard.
I'm quite surprised to hear that a lot of these private blockchain guys are moving towards public. It's quite interesting to hear this development because they think like, oh, okay, maybe public blockchain is the solution after all. So, but yeah, I think it's very interesting. Normally, you normally hear more interest about private blockchain whenever price of major cryptocurrencies are down. So like it's always like a cycle to go from public to private and then back to private and then public again.
Yeah, true.
Price fluctuation.
But that's an interesting point. What kind of use cases for enterprises, public blockchain use cases that make sense for companies or enterprises in your opinion? Yeah.
So for me, it's just ideas. I don't know any like real thing, but like just 2 ideas come to mind. One was, so Vitalik recently released a blog post called like Control as Liability. So even like 10 years ago, Zuckerberg and Eric Schmidt, they were all for like anti-privacy. They were saying things like, you can look this up. They were saying things like, if you're doing something that you don't want other people to know about, then maybe you shouldn't do it. It's like, the fuck? And now like they've did 180 completely. And they're saying like, Facebook's saying like, privacy first, yada, 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 yada. And so we're entering these territories with like GDPR and all this stuff where the more data you have, there's an upside to your machine learning algorithms becoming really powerful. But anytime there's a data breach, there's going to be a huge hit to your company every single time. So then now they do have to think about like how to relinquish control over this data. I don't think they're going to do it in one instant, but blockchain is, or like decentralized mindset is a way of like them relinquishing the data. And then another one is when we're because what's important is these algorithms, right? These machine learning algorithms, and how can they machine learn stuff that's stuck in other silos without them having direct access to the data? And those are interesting questions that I think, blockchain could be useful, or cryptography at least could be useful for. So that's like the bigger ideas. The smaller use cases, I don't know. I think each company is gonna have to figure that out on their own.
Okay, I think say because I've been looking at Lightning Network for a while. Lightning and Internet of Things, IoT, for example, might make sense because use of Bitcoin as a neutral global currency, which doesn't belong to any single company, would fit for something like IoT networks, right? If it's controlled by something like Facebook, for example, we're going to have like multiple IoT networks, which makes it less efficient as a whole. So I think for that type of situations, it probably makes sense to use one single common neutral currency so that any devices can just communicate with each other through that. Is one of my ideas, or one of my thinking, I would say. Oh, by the way, Facebook recently announced GlobalCoin, right? Did you guys see that?
Yeah.
Would you add GlobalCoin on CoinGecko? It'll be number one instantly. Top of the list.
If it's traded on all the exchanges that we track, then yeah, of course you add and track.
It'll be Bitcoin instantly.
But if it's like a Facebook credit thing where you can only buy it from Facebook and not trade it, then I guess you can't really track them then.
Yeah. It's not really.
But I think it's Bitcoin, so it should be around $1, I suppose.
Yeah, it's more like Alipay competitor, not really Bitcoin or other crypto competitor, I would say.
Yeah.
Like these decentralized stablecoins are really scaring the crap out of regulators. Like this just like inside, like kind of like I just know this personally, but like like the SEC, there's a lot of different projects they could be looking at, right? But they have a very particular interest in MakerDAO, and even in Korea, we have this stablecoin called Terra, which gets very very special interest from the Financial Services Commission and stuff.
Interesting. How does that work? Terra, is it like Tether or?
It's like an over collateralized like 2 token thing. But what's crazy is like they like straight up said like Terra is all about seigniorage in the e-commerce market. And like the government, the moment they hear that, they're like, oh shit, like we are gonna make sure you guys are gonna have a very difficult time coming to market. And because it's one of those it's one of those holy cows, right? Like who prints the government? The government is the one that prints the government. Prints the money. Like how dare you step into yourself?
Yeah. One last question for me, for Sion maybe, is the concept of open finance or DeFi, decentralized finance, is it getting popular in Korea? It is kind of popular in Japan now, right? But at the same time, I feel it's overpromised a little bit. And some people, especially finance people, seem to be very skeptical about the whole concept, at least so far. What's your take on that?
I think the idea is correct. I don't know if Ethereum's the best blockchain to do it on. And like in open finance, you have everything included, right? From STOs to Lightning to like
I don't like including Lightning on open finance.
But I mean, it does open up the finance, right?
True.
Yeah, that's what I mean. I just mean that sense. And I think that so first of all, to answer your question, no, it hasn't caught up in Korea. No one gives a damn about DeFi.
Interesting.
It's really I think it's a very like US driven Silicon Valley.
Right.
I agree. I agree. It's very a US thing. When I was in Consensus, like everyone's talking about DeFi in New York. So it was quite surprising to me. It's like, because I think over in Asia, like, I mean, there are people talking about DeFi, but not as much as what the Americans, the Silicon Valley and New York guys are talking about it. I think everyone's really interested in staking. I mean, in the borrowing and lending rates. If you look at some of these sites, you can see that. I mean, for example, you can lend lend DAI on Compound V2 version 2, and you get like up to 11% interest rate. That's actually pretty attractive. I mean, over the weekend, I tried some of these platforms, put out some loan on these DeFi and centralized finance platforms. I think it's very interesting. But I think a lot of people don't talk about this biggest risk, this big risk, in the sense that basically when you send money onto any of these platforms, you're essentially locking money up in a smart contract. Maybe no one finds any vulnerability at the moment yet, so your funds are safe. But you never know when, like, a hacker might find a bug or a vulnerability, and then they can drain all the funds there. And what happens then? Like, if the smart contracts like underwater, like I guess everyone's gonna socialize the losses then, I suppose.
No, that's a very good point, and I had the same exact concern when more and more money is locked up. It's kind of the DAO situation, right? Mm-hmm. And all those DeFi applications are very complicated, so there's always a risk of somebody hacking it. And then if it's the money they will lose is too much, for example, then I'm afraid the conversation about hard forking or rolling back the chain might happen again, right? The same thing as what happened with the DAO. So that's one of my concerns about the DeFi.
So I guess it's still early days. It's not as big as what it was during the DAO, but I mean, the question I guess to you is, I mean, 11% sounds pretty attractive, but is it worth the risk in case there is a vulnerability in the smart contract? I mean, so far there is nothing, so I guess it's pretty attractive getting 11% on stablecoin. In fact, like if that's the case, like you should take all your US dollar, heck, borrow money from the bank, buy DAI, put on this lending platform.
Yeah, exactly. You will make more money using centralized counterparts, right?
Because if you think about it, you can probably borrow from the bank at like 5-6% or maybe 7%. Most of the time, you get 11%. Just, I mean, it makes sense, right? You get a 5% extra return, but I guess there's a lot of risk that a lot of people are not looking into it yet. So yeah.
But even when we're having this discussion, like, you know, what I said about like it being a very like Silicon Valley and New York thing, this is what we're saying is like really is too intellectual and too deep for people, in my opinion. Because like the way financial markets work has always been, I don't know, just growing up, it's always been like one of those things where it's surrounded by mystery, right? It's shrouded in mystery, and you believe your fund manager or your fund advisor, and you ask them to do everything for you, right? Yeah. Or even your bank teller. Your bank teller doesn't know anything, but you trust that because they work in the bank that somehow they're smarter than you when it comes to money. But now we're seeing like people who are, you know, technical now getting into these financial things, but to communicate this to the average person, like I don't think the average person is concerned with, oh, there's a possibility of the network blowing up. That's not why they're not using DeFi. I think it's rather like they just don't get it. What's the point of me talking about DYDX and like derivatives markets when already like I'm like, you talk about public-private keys and I'm like, oh, this is too complicated.
But 11% interest.
So I think there is some sort of like arbitrage opportunities to be made. So one of the projects that we're working on, it's an education platform with a decentralized exchange function. Mm-hmm. But now what we've decided, so it uses like 0x and Uniswap. But now what we decided is we decided to offer margin trading using DYDX. And margin trading is illegal in Korea. And so in this case, it's an attractive option because Koreans want to margin trade. Like this, we just know this, but the government won't let you do it on a centralized way. So if we offer it on a decentralized way and we educate people on like what derivatives markets are actually good for, I don't know, maybe it'll be useful and people will take advantage of the opportunity.
I think that's a fair point. But at the same, my response to that is just like what's happening to Binance DEX. I think a lot of DeFi services and applications will be censored as well. And then regular people won't be able to access them anyways, right? So maybe it's the same thing, same difference. I don't know. I'm not too critical of open finance in general, actually. I think it's kind of interesting, but right now it's still very immature. A lot of the stuff happening don't seem to make sense to me too much. But I think it could offer something very new and interesting in the future.
So can you elaborate a little bit about censored? What do you see being censored in?
So, for example, if you include STO as open finance use case, it'll be heavily regulated. Is one thing. Yeah. It won't be open, right? That's one thing. for other lending platforms and others as well. I mean, it also depends on what regulators will think about them. But if it seems like it's offering some kind of financial services or derivatives, they might try to regulate them, even if it doesn't make any sense. And if that happens, developers or companies behind DeFi, open finance, they need to comply with that.
So now that's the thing, right? Because there's a difference between regulating companies to censor the user interface, and then regulating the companies to censor the smart contract. Which
no, definitely agree. But a lot of open finance protocols or projects, say like MakerDAO and others, they're not very decentralized. They have the governance token, and others they have the company. So if the company gets hit, the project's pretty much over, in my opinion. I mean, they can fork and create a different version, but they have that unnecessary tokens sometimes, and they have a wrong setup in my opinion. So they're not very decentralized, is my criticism, I would say.
For sure, I agree.
Yeah, but at the same time, I don't want to be too pessimistic about it, because it could offer something interesting, definitely. So yeah, but I was kind of arguing with some people in Japan about this, right? Because some people like pushing, like, oh, this is the future, it's great, everything. Like, well, I mean, it's kind of interesting, but there's always, things I can criticize. Or
I think DeFi is Ethereum's defining moment.
Yeah, true.
I really think DeFi is like whether Ethereum version 1 sinks or swims.
Right. It's like Ethereum's trying to rebrand itself, right? It used to be World Computer. Now they're saying like DeFi. So seems to me it's like a marketing message so far.
Let's see, in a few months' time, we probably know how it turn up. I mean,
I might be
6 months or so, something comes up. So I guess in the 6 months' time, we'll know if people are still interested in DeFi or they move on to the next new thing.
Yeah, Ethereum trends come and go. Just change too quick. I cannot really keep up with them, to be honest.
Well, I'll send you an interesting thing about, there's this blog post about how Bitcoin narratives have changed over the years.
Oh,
and
that's
how also Ethereum narratives have changed over the years. So everything that we have is very nascent technology. Right. The narratives are going to change for sure.
Yeah, that's interesting. Okay, I think it's a good time to wrap it up. I think it was a very good, interesting conversation we had today. Yeah.
Steven's place was pretty bright at the start. Like now it's completely dark.
Yes, I live in the northern hemisphere.
Yeah. Are you recording outside or?
No, I'm actually, we have a little shack in the rooftop. And so I'm just recording here, and it's like, the light is pretty dark, so I don't turn on.
It looks like you're camping or something.
Yeah. Crypto camping. I'm trading right now on Binance.
Yeah. Anyways, thanks guys. And it was very interesting. I had a very good time talking with you guys. Well, let's do again next month. Make this a monthly thing. Anything else you guys want to add?
Nothing on my end. Thanks for watching, Internet. I hope you guys had a good time.
All right. Thank you for watching. See you next time.